Good morning to all my friends and family, and welcome to Jim's 5 a.m. club. And you can just see that it's going to be a beautiful clear day. I can see the moon high up in the sky. Let me just show you the moon. Where is it? There we go. There's the moon up there. There's plenty of stars about. The breeze is blowing from the west, so we've got a westerly breeze. It's a gentle breeze. I think I'll stay up here for the time being and maybe go for a walk shortly. But you can see the seagulls all resting on the top of the roof there at wharf number 5. I just popped off the train here at Circular Quay and am presented with the most beautiful view of Circular Quay. So what are we going to talk about today? I left my notes at home and I was wondering what I was going to talk about. But what I want to talk about today is a topic which is near and dear to my heart and something that I live and breathe every day. And I'm kind of hoping that it will be something that you may benefit from as well. And what I want to talk about today is the power of leverage in terms of building wealth and making profits. For those who know me well, you'll know that I'm a trader, a stock trader, and I enjoy trading on a daily basis, and I've been doing it for about 10 years. So I've built up a lot of wisdom, a lot of skill, a lot of painful lessons over that period. But it's only when you immerse yourself in a discipline that you become good at it. So I want to talk today about the power of leverage and how you can make money buying and selling shares. So let's go for a walk and talk, and I'll continue along this vein. So the only way to build wealth is to invest your money, invest your savings in ventures or products or investments that are going to be worth more than what you've spent on them. And banks and financial institutions offer loans to investors called margin loans. For those who are not aware, a margin loan is where a bank will loan you money based on the collateral that you have with respect to the share value of the portfolio you have. So for example, if you want to buy blue chip shares like Rio Tinto, like NAB, the banks, any of the major corporations in Australia, those shares are considered to be blue chip shares. And what the banks do in a margin loan is they offer you various LVRs, loan to valuation ratio. So the blue chip shares generally have a 75% LVR, which means for every $1 you put down, they will loan you $3 to buy your shares. So how does this work? So leverage can work in two ways. Because it amplifies your exposure. It increases your exposure in times when the share price goes up. You can make a multiple of your investment, and in times when it goes down, of course, you can lose much more than what you would have originally lost. But the trick is to try and position yourself to, if you're a trader and you see that a share has been sold off, and what happens in the market is that the markets are based on emotion, and people tend to oversell or overbuy. So when a stock is in favour, people will buy it and push the price much higher than what it should be, and vice versa. When there's a sell-off, people tend to overreact and oversell it. And it's at those points, it's that point when people have oversold a particular share that you can come in and buy using the leverage facilities that I guess most or every stockbroker can talk to you about. I use a product called Leveraged Equities, and I've also got an account using ANZ leverage facilities. But it's very, very simple. Say for example you want to buy 1,000 Rio Tinto shares. They're currently at about $115. So to get 1,000 of those, you put down your money, and the bank will give you or loan you 3 times that amount. So, for example, if you're a property investor and you're receiving rental income on a monthly basis, if you really want to be aggressive and maximize your returns, what you can do is you can take that rental income and deposit it straight into your leveraged share account, and say it's $10,000 a month that you're getting from rentals. That $10,000 a month can give you exposure every month to another $30,000 of shares. So you can get $40,000 worth of shares in addition, and you can work it like that. So through leverage, you can make quite a bit of money. For example, share prices can move 10% over a few days, and if you pick the right move, that 10% from a leveraged perspective can give you a 40% return on your investment. So if you buy shares and you have the leverage, all right, you put down $1, the bank puts down $3, which makes it 4 altogether, and you buy shares and those shares go up 10%, you've actually not made more than 10% on your money. You've made 40% on your money because you're using OPE, other people's money as well. A lot of people don't understand that the reason why property investment is so powerful and so successful is because it's the greatest leveraged investment that you'll ever participate in, with the exception of futures, of course. But with property, let's just examine property at the moment. So with property, you can basically put down a deposit of 5%, and with that 5%, you're getting a property which is leveraged 95%. So you're getting a 20-to-1 leverage. And that's why, so you put down, say, $10,000 and you can, you put down $100,000 and you can basically buy yourself a $2 million property. If that $2 million property goes up 10%, then you've basically doubled your money straight away, tax-free, if it's a real estate investment. And that's not taking into consideration the buy-in cost and the exit cost of real estate and stamp duty. But I'm just giving you an example of how leverage can really enhance, amplify, multiply your returns. And it's important to understand also that the only way you can make significant money is through leverage. Now you've got to be using OPM, other people's money, to multiply your returns. But as we said before, it works both ways. You know, when you're heavily leveraged and the market turns down, then your losses, your potential losses, are enhanced as well. And that's where it takes a steel will, where you're able to just hold on and ride out the negativity. So I think I'll leave it there. It's a powerful topic. I love it. I noticed overnight the gold price has jumped up $20, $25 overnight. And I happened to buy some Newcrest shares overnight. So I'm looking forward to seeing a pop-up in the share price today. But it could have gone the other way. But the big message that I get from my share broker is that there comes a limit to how much a share can be sold off. And basically it gets to a point where it starts screaming to you, buy me, buy me. And Newcrest and Northern Star gold prices or gold shares, which are at that point at the moment. I'm kind of looking forward and hoping that the gold market turns around so we can make some money. Anyway, thank you very much for joining me on Jim's 5am Club on this beautiful early morning. I want to wish you all the best. Let's finish off with a positive affirmation. I'm alive, I am well, and I feel absolutely great. To my friends and family, stay connected, stay relevant, stay reasonable, and most importantly, understand that the only way to build wealth is by making investments in either shares or property, and to use leverage to increase your exposure so that when the market is performing, or when those shares perform, you make a bigger return using your money as the source of that investment. So take care, Dilemma, and we'll chat again throughout the day where we can share some insights, some messages, some knowledge, some wisdom, where we can help each other get through the morning, get through the day, get through our lives, and make the most of the opportunities that we have available to us. And so that we can be the wind beneath our wings, we can live, learn, and pass it on, and make every day a winner, or at least position ourselves in front of explosive growth so that we can make the most of it when it presents itself. Just one more topic, one more thing before we go. My broker always talks about the importance for those who don't have a taste for trading on a daily basis. Another method is to set up a thing called a vomit fund, where you set up your structure. So you set up your structure with say a margin loan account, which gets approved, and you may want to get it with $1 million sort of limit, so you can ebb and flow it and grow it. And then you just wait. You just wait until the market shits itself, and the market will shit itself, once or twice a year, where it'll drop by 10% or so, and every 3 years it may drop by 40%. But if you've got that structure in place, when the market does crap itself and it becomes obvious that there is plenty of blue chip stock available around at ridiculously discounted prices, then what you may want to do is you may want to drop $100,000 or $10,000 or $500,000 into that account, and then buy up all those blue chip stocks. So if you put in, say, $250,000, you can get $1 million worth of stock, is the message that I'm trying to portray to you. And if those stocks recover, which they will, and they'll recover very quickly, then you can probably get a 30% return, which actually means an enhanced return. It could be you could actually double your money very, very quickly. So just food for thought for those who don't have much experience in the share market, that with leverage and with supreme timing, once every now and then, you can make an absolute fortune. So take care, and we'll chat again. Yassas, and bye for now.